this is going to be the last webinar for the year. Our friend, our favorite Dale, unfortunately woke up in the middle of the night with a very high fever. So I'm guessing he's not going to be 100% by tomorrow. And anyhow, more or less, I'm guessing that the markets are going to calm down. Not that we've had much of a movement, but we do see some FX moves, which we're going to view together within the next half an hour, 40 minutes, whatever it takes us to see them and answer any questions we have. And then the next webinar is going to be, of course, with the full team being here on Tuesday, the first working day of the year. Blake is back, obviously, but you know, he's taking this week in a more relaxed manner because you know it's very, very, very early for him. So you know he's taking off the early hours so he can put more sleep and get ready for the new year. He sends his regards and wishes to everybody. You're going to hear him on Tuesday as well, of course, obviously. Gregor might be with us later today for a few minutes to see if he has any updates from an Elliott wave perspective to the recent moves we've been seeing. Having done the introduction myself, which is obviously not my specialty, we can go over and have a look at a few things. By the way, as always, feel free to ask any questions you want. If you want us to check any specific pairs, because obviously I'm not going to go over all of them on my own. So please go ahead and ask away whatever you want us to have a look at. We will have a look at. So having said that, let's start with a few of the more popular ones. And then let's focus a little bit more on what's moving and what not. And we take it from there. So first of all, the EURUSD is making a move above the bull flag today. Of course, as I said the previous days as well, you know, I remain a little bit cautious just because we all know how thin liquidity has been and will be, especially during the days between Christmas and the New Year's. But regardless, you know, since there is no proof that these moves are going to be reversed and they're not extremely wild because they're, you know, they're quite slow and they're moving step by step. Okay, 1 second. Greg is writing to me. I think he's going to be on, as I said. Okay, yeah, he's probably going to be with us in a few minutes. So if you have any questions for Greg as well, this is your time to start thinking about them. The EURUSD is making a move up above the bull flag. As you see, if we zoom out, it was a clear night. We then had what we interpreted since the beginning as a corrective move due to the pace of the depreciation and the choppy nature. We always believed that this is going to be a corrective move. We even left the door open for a possibility for one more move lower as a second option, but for the time being, it seems that we're breaking out. This also bodes well with our view on the DXY. We showed it yesterday, but I'm going to show it today again. At the same time, we have the cable doing an equivalent move. Actually, the cable broke above its bull flag yesterday. Today, it's just confirming the move by accelerating somewhat higher. And the DXY is currently, for those of you that are subscribed to ForexAnalytix, you've already received the alert. The DXY is currently very, very close to a very crucial level, to the breaking point of this short-term consolidation that we had, and to confirming that the move higher that started in the first days of September and peaked at the first days of November. So in essence, that was a 2-month corrective move higher, is over and done, because then the level we're talking about is the 90 to 60. That's the confluence of the 61.8 of the corrective move higher. It's also a level and a an area that has proven multiple times to work as support resistance, not only in the recent past, but if you go back in the more distant past as well. Obviously, as you understand, a close below that level in combination with the breakouts we see in the euro and the pound add more fuel to the scenario that the dollar is going to finish the year in the same way it started it, being on the back foot, and that might be pointing to a continuation of that move in at least for the first period of the month ahead, the first month of the new year, and we take it from there. So this is what we're looking at. And I think, the first few days of the new year is going to shape that up, but that's obviously going to be a huge hint of what lies ahead for the dollar, the euro, etc. Now, let's have a look at the precious metals because, as we said plenty of times, they seem interesting as well. The silver specifically was trying to break out of this resistance level earlier today, but it's paring back most of the gains so far. So the 1670, 1675 level quite important to monitor. Gold is attempting a breakout from this. Actually, let me redraw it because that's exactly how it should be. There it is. There it is. Okay. From the triangle's resistance, the move higher has been quite impressive. From 1236, we are now almost $60 higher, $55 higher within a matter of a few days. As I said, though, many other things don't actually confirm gold's move. So, I'm just monitoring. Obviously, I'm not going to take a position just a day and a half before the markets go offline once again. But the next resistance level of big importance is the 1300 level, not only because it's a round level and a psychological level, but because it has also proven to be a very strong area of support resistance in the past. And if somebody told me that a move might unravel, with the start of the year and liquidity coming back, probably gold would be my first candidate to be doing that. I had a position. I took profits being short, not all of them because I was hoping for more downside, and I'm not going to be against shorting it once again, but definitely not going to do it today or tomorrow. Let's see how the markets start on Tuesday and Wednesday, and by the end of next week, I think we'll have a better understanding of what the new year is bringing on the table. So let's also visit the Aussie and the Kiwi because they've both reached the equivalent resistances that we were looking for. For the Aussie, we were looking for the 38.2 and potentially a push a bit further higher towards the 200 DMA. We actually got to do that. I mean, we stopped like less than 10 pips away from the 200 DMA, and we seem to be stalling here for now. The Aussie, all less than 5 pips away from the 50% fib. So having seen these moves, I have to say that I'm not anymore an advocate of looking to the upside. I'm not saying that they can't have more upside, but I'm saying that the easy part of the move higher, the one that I considered more or less a given once we got to see the reversals and the little consolidations that we got afterwards, is done. So what happens from here on is still uncertain because, first of all, I have to treat these as corrective moves higher, given the moves we prior had to the downside. But even if you look at them as corrective moves, but even if you look at them with the possibility being the beginning of another impulsive move higher, I would first want to see some type of a pullback, get to see more price action, so we can recognize more clearly the type of structure that we have before we can actually advocate to more upside. So I think the easy part of the move higher for the Aussie, and they might not even get higher prices until the year is over, is done. So that's it. Now another pair that is definitely interesting is the USD CAD, because the USD CAD broke to the downside of the recent range. It's actually approaching the 38.2 of the what seems to be corrective move higher. I always believe the move higher is going to be corrective, but as I had said many times, I was wishing for one more push above the range highs to get people believing that the pair is moving a lot higher than what it is. So I was hoping for a move towards 130, 130, where we find the 61.8. And as I had said, I was more than willing to be short that pair up there, but as it seems, there is a good chance that it's not going to do me the favor. On the other hand, at least I'm still involved with the NOK. I'm still short the USD NOK, 1/3 of my position off earlier today at 8.22 and some change. So I take some more risk of the table. My entry is just below 8.30. So it's not big of a profit or anything, but I'd rather take some risk of the table, having some more liquid days coming ahead. It was also like we were approaching the confluence of the 200 and the 50 DMA. If you see also we have some horizontal support just a little bit lower towards 820, and I really want to see the USD NOK close below the ascending channel. USD SEK has already since several days ago confirmed this type of a move, because it has broken its equivalent trend line several days ago, and it actually seems to be playing ball a lot better than the NOK. So between the two of them, obviously I should have gone for the SEK because I was monitoring it, but it is what it is. I took the USD NOK short, so I'm benefiting less from the move than if I was short the USD SEK. How do you think the USD CAD is forming a flat correction as Gregor's projections? It might, Karad, it might. I mean, to be perfectly honest, it's not impossible for the CAD to want to trap people short, breaking below this range, and this being a flat and reversing with the beginning of the year. And that's one of the reasons that I'm not outright going short here, because I'm a little bit skeptical due to the days as well. Otherwise, I might even consider being outright short on the break of the range. It might. I have to tell you that the 38.2 is quite an important level, not because it's an important fib, because it's quite a round level, because it's around 126. It's also a level that has produced resistance in the near past. So we might get a reversal from there. But I have to tell you that I'm really skeptical about it. The reason I'm really skeptical is because, as I said, I was always viewing the move higher in the USD CAD as a corrective move, and that hasn't changed. So my medium to long-term bias remains wanting to be short. So when you have a longer-term bias being on the short side, you really don't want to try to fade. Moves that are in the direction of your longer-term bias. You know what I mean?
Hello, Steve.
So, hey, Gregor. And by the way, Gregor, we just had a question for you. It's actually if your thesis about the USD CAD being on a flat correction, especially now that it has broken below the range that had trapped it since the end of October. If anything has changed on your thesis, that there is, I remember that you were looking for one more push to the upside. I was also looking for one more push to the upside, but I have to be honest, now that it has broken below the range, I'm a little bit more skeptical about it. Although being the end of the year, I try not to give so much importance to these moves. But what do you think?
I think that I'm still tracking a flat correction here in this wave B, and actually I think that there is room actually for 1.2550 before we get a bounce. I also see crude oil moving out of a triangle. So I think
you know something.
in a fifth wave. So
let me give you the screen anyhow. I can take it back then.
Sure.
And as always, we can always comment on your charts. I mean, the two of us, I think, are.
Did you? I can see this share screen option.
What about now?
Yes.
Oh, okay.
Okay. What do you see now? Which screen? Do you see charts?
USD cut for our chart. I see on the left side.
Perfect. Perfect. So actually, my point here is that we are either going to see only a free wave rise and to retest of this upper falling trend line on a weekly chart. So for now, I see somehow for the next few months, I see a bullish pattern. Either this will be only a correction or maybe start of a new uptrend. At this stage, this is not important. The important is that I see
personally, I have to tell you, as a longer term thesis, I'm viewing this move, even if we bounce higher from here, as corrective. So my personal thesis remains that we should see more weakness afterwards, no matter what happens from here.
Okay, so I'm just seeing for, let's say, for the start of 2018, I think that we could retest these highs from October and late November from 2017. So I'm actually looking for a push higher. I see also formation of potential head and shoulders pattern here. And
an inverted one, yeah.
Yes, and what I said is about the crude oil. Now, crude oil is seen in a fifth wave here out of a triangle. Now we know that fifth wave is a final leg within larger trend, which means that I will be expecting a reversal in three waves, but again, only in a corrective movement. So what I see here is that actually when crude oil will turn to the downside in three waves, normally this will take us back to this triangle range, or possibly even towards the $55 per barrel. I think that's the ideal timing then for the start of next year, dollar CAD to find a support. Okay, so actually based on time, based on structure that I see here, maybe a little bit more upside towards 61 and then reversal to the downside, and this could perfectly match out with dollar CAD, which I see it also.
I like your target, which is around 61, because at 61 we also have the 161.8 extension. I was showing it yesterday actually, of the recent triangle's maximum range. So yeah, go back to oil. Yeah, there. So if you project from the peak of wave 3 to the bottom of wave 4, a fib extension, you'll see that at 61 we also have a Yes. There it is. You see?
Yes. Okay. Now, normally, if I assume that this was end of a wave 4 here, okay, then normally projections for a fifth wave are 200% of a wave 4.
Okay, but
okay,
you know,
that's ideal from an Elliott wave perspective. And
yes,
also,
but you know, from a basic technical analysis perspective, the 161.8 is quite a nice extension as well. I mean, I very often see it working.
It's minimum objective, that what I would say. Okay.
Okay.
But as I said, technically speaking, based on dollar CAD, if we expect here a retracement, which I believe sooner or later will occur, maybe even back towards this important
55.
Yes, 55 level, even down to 54. I think will be a perfect timing for dollar CAD to make a bounce. So that's why I think the dollar CAD could be, from my point of view, be a very nice opportunity. So as I said, crude oil I see in a fifth wave. Important is that
to make a long story short, you expect this recent move to be more or less a bear trap in the USD CAD, because it seems to be breaking below the range's support. So you view this as a bear trap, right?
Yes, exactly. And actually, it's not only about the crude oil, it's because of the structure itself. I cannot count this in impulsive fashion to the downside. So clearly, this to me appears to be a correction. Here's a little bit better shown. Now, if we take a look here from end November, we are actually going nowhere. We are sideways for what? For 2 months, okay? But previously, we have seen in the same period, also in 2 months, a very strong and extended move. So clearly, bulls are much stronger. So from my perspective, this was an impulsive reaction, and this is a slow reaction. And it's simply because of timing and because of limited range. So as I said, 2 months, very limited range. In the previous 2 months, very extended move. And if
I know that this is a quite not complicated thought process, but it's like I'm projecting a few steps further. Do you see perhaps a period of, once again, the currencies like the euro, the pound, overperforming in the beginning of the year, the commodity currencies once again after equivalent corrections lower? Because I'm saying that because I also see the Aussie and the Kiwi having extended some moves that for the time being I'm viewing as corrective. You're also expecting CAD, not USD CAD, CAD to perhaps underperform once again. I'm seeing the euro and the pound, being decently strong at the moment. Do you think that we might begin the year with the crosses of the euro and the pound strengthening once again? Because I also see some completed five-wave moves to the downside. So at least I think a corrective bounce for all of those is probably in the cards.
At least a corrective bounce, I think that those crosses could move to the upside until we see new highs on euro and probably on cable as well. If we take a look on the euro dollar, and I think this trend could come from here, from euro dollar. So overall, looking at the euro, I still think that this can be a triangle. New Year holidays are approaching, so maybe we will now get a little bit slower price action probably tomorrow, if not already today, and then we see maybe a pullback and then a new high at the start of 2018, and that's when we could see those crosses moving to the offset, as I said. And on cable, if I make a real quick outlook, cable also, this was very, very ugly price structure actually, so it looks like a correction. We are currently at this
like to me that we're breaking over bull flag here.
Yeah,
I mean, so, that's how it looks like.
Yeah, so I would be looking for both of these currencies, euro and pound, to move to the upside, and ideally dollar CAD will stabilize at the start of the year. And same thing with the Aussie dollar on the upside. Also, I see the same thing, despite very sharp moves on the upside on New Zealand dollar and Aussie. I think that I don't trust those moves, okay, during holidays. So I think that dollar CAD could then be in the same situation.
And not only that, both of them are entering. If you remember, it was with you again. We were here on this webinar, like whatever it was it a week ago? If you remember, I told you that the currency pairs that I have the highest conviction for the next short-term moves were the Aussie and the Kiwi, for them to resume to the upside, because they were both in short-term consolidations after their initial moves higher. And now that this has actually manifested and both of them have started hitting some decently important resistance areas, it wouldn't at all surprise me. That's actually how I started. It's one of the first things I said in the webinar. Probably you were not on yet. I said that this is now the place that I would be very skeptical of being long anymore, the Aussie and the Kiwi. And I would be looking for the structure to show me and confirm if we are actually about to resume to the downside, or if for some reason there is more upside left.
Yes. Also, I see on New Zealand dollar this important trend line. Okay. Yeah. That was broken last year.
Trend line. Yeah.
Yes, and now we are going to see a retest of this trend line. So actually, I adjusted the wave count a little bit. First, I thought that we are still in a wave 4, but it looks like that we could be in a wave 2 here. So now at this trend line, but of course, from a trading perspective,
the question is
to see a very strong fall.
Yeah, the question is that A of 2, or is it the whole structure of 2 that it's currently completing? So you think it's an ABC? Okay, now I see it on the right hand side. Sorry, I had focused on the left one. Okay.
Yes.
So you don't interpret this as a possible, isn't there a chance, Grega, that where you have on the right hand side now, where you have A is 1, where you have B is 2, then 3, 4, 5, and perhaps this is A of an ABC correction, or you don't believe in that interpretation?
It's possible, but because of this trend line, okay, because of dollar
you favor that interpretation.
Yes,
yeah,
exactly.
Yeah.
And also, if I take a look on Aussie, same thing. We have seen a 5-wave drop, and now we could be in a sharp wave too. Also, I would pay attention to these resistance levels, 50 and up to 61.8%. So if this one is going to turn down from here, I think that obviously New Zealand dollar
keep in mind that 78.13 that we almost tested today, like just we came short, like I don't know, 2, 3, 4 pips, whatever, is the 50% fib of the last move lower. So we in essence have reached quite a decent retracement as well.
Yes.
For the Aussie, I mean.
Yes. So I just think this should be faded, at least from my point of view.
No. I'm totally with
volatility. It's definitely different in these 2 weeks than normally during the year. So these flows are not the real flows, I believe. Okay, it's on some thinner money. Okay. And that's why you see more volatile moves.
Okay, no, I'm with you. I mean, there's no disagreement.
Also, we could take a look on gold. I think that there is also potentially now wave E in progress. So in start of 2018, ideally we will see a turn to the downside.
Yeah, that's exactly what I said at the beginning as well. Personally, I was short gold. I got stopped out in profit because I was expecting more downside without such a big bounce. But I'm also really looking for an opportunity to be short once again gold, because I'm not really persuaded by this move higher. I'm really not. It doesn't feel real to me for some reason. It's more of a hunch at the moment. Yes.
But now that when you mentioned opportunities, I think that one of good opportunity could be maybe on DAX. As you know, I'm short with PIP. This already from a week back.
Me too. I'm short with an actual position actually, and it has been doing nothing, but I'm holding the position. It's one of the 2 positions I've held through the holidays. The other one being USD NOK to being short.
Yes, but actually, I would. You should be aware that there can be a bounce up to even to 13,200.
No, I'm okay with that. With that.
But the validation level is still a little bit higher.
Greg, we have a friend asking, and Catherine is actually asking, and you know something, that's a good question, because I wanted to ask you myself about your view both for the Aussie yen and the Kiwi yen, because they have also surprised with the strength of the bounce higher. I mean, I was monitoring at several critical resistance levels, and they sliced through them like it was a knife in butter. Although I have to say that the Aussie yen is currently testing the 61.8, which is like a very, very important level. And on the other hand, the Kiwi yen, I don't know if you have the same thing drawn on your chart, is retesting a the broken triangle's support line as resistance. So both of them, also the 61.8, so both of them are at quite a critical juncture at the moment. But do you believe that that's it? They've also exhausted their rebound abilities?
I think that Aussie yen is in a really, I have chart here, just a second. I will show it on the website. So actually what I think is that Aussie yen, okay, is not very interesting from a trading perspective, but if this is a wedge pattern called an ending diagonal, then I think then I think it can be very interesting in 2018. But still, there is another leg missing here, so I think that this market could potentially reach this upper trend line and then turn to the downside. But even from a current bullish perspective, that I expect another bounce towards 90, I think that I would probably avoid this pair, because trading in this So unclear and undirectional
market, yeah, it's dangerous.
It's because it can be anything else as well. So it could stay in range, maybe form some kind of a triangle, whatever. So it's not really tradable, but it can be tradable if we see this fifth wave and then starting to turn to the downside. Then I think I would try to short it actually. And if I consider that maybe, like we all do, I believe, we expect a pullback on stocks, then this stocks decline could be a trigger for those crosses.
Okay, okay. Let me see. I have more questions. And ZN is dangerously bearish. Yeah. By the way, I'm guessing. Oh, let me read the whole comment. Okay. Rob tells us, I'm reading the following: 1, USD funding issue globally. That's more or less true, actually. 2, Euro COT positioning longest in 7 years. 3, US tax repatriation expected now. Now, doesn't this kind of cap Euro USD upside instead of a new bull trend? And he's resuming, and ZN in dangerously bearish territory. First of all, before Greg answers to that, let me begin to give my viewpoint shortly about the last part. You said that ZN is in dangerously bearish territory. I think that both Greg and I agree that the treasuries look quite bearish at the moment, although that has nothing to do with the Euro USD exchange rate. What I'm trying to say is the following: in the extent that a currency pair is being affected by interest rate differentials, nobody, it doesn't matter how US yields move. It matters how US yields move in comparison to the European yields. So, for example, even if the US yields start climbing higher, if the equivalent Eurozone yields start climbing higher in a faster pace, you should still expect Euro USD to appreciate. So the last part of your comment, I don't think we should take into account at all, because it remains to be seen what are the bonds going to be doing at the same time, for example, or the rest of the Eurozone bonds in the bond market. Now, having to do with the rest, Euro COT positioning longest in 7 years. If we said the exact same thing 1 month ago, 1 week ago, we should expect a reversal, right, Rob? COTs are quite important. What they lack is timing. So nobody says that we can have the same conversation 7 years and 2 months later. So I mean, we can have the same conversation and in 2 months saying COT positioning longest in 7 years and 2 months. It can be the case, right? So nobody doubts that at some point this is going to unwind. And if I remember right, and correct me if I'm wrong, Grega, you expect another push higher in the Euro USD, but you expect that to be terminal. Am I right on that?
Yes.
Yeah. So for example,
I think that there will be even once we get in 2018, and once we start to see a new push to the upside from current consolidation, I think that there will be even more investors, more traders that will be even more confident that euro dollar is really back in a bullish trend. It's going
to skyrocket, yeah.
Yes, and more traders will fall into this trap. That's even better from a psychological perspective, how actually Elliott wave works after all. So normally a lot of traders are getting bullish in fifth wave. Okay, yeah. Probably 80 to 90%. So
yeah,
actually,
so for example, you see a push. Yeah, so for example, you see a push towards, let's say, 123 and then a reversal, right?
Yes, around there. Yes, we could say that.
Okay.
123, okay. Maybe a little bit lower, but the key is that we still expect another like higher event term. So
okay.
But as I said several times, even if major bottom has been established here in 2000 at the start of 2017 or late in 2016 actually, you would still expect a 3-wave retracement after you see 5 waves up. So
and you will just then change your mind and consider this leg higher to be one of a new 5-wave sequence,
yes,
correct?
Yes. The key is that after 5 waves up, market will make at least 3-wave retracement. So maybe it will make only an ABC to the downside after we see a 5th wave push up, or we will see falling market with 3 waves that are part of a new bearish sequence. But in which case,
even if we take the bullish scenario, let's say that this is a new 5-wave sequence of the first wave of a 5-wave sequence higher. Even if we push, let's say, to 123, I'm guessing that a decent 3-wave retracement would probably be down to 116, 117, something like that, right? Where would you expect a retracement to come to?
Back to the wave 4.
Okay, so somewhere where I said, right?
Yes, and actually these are also those previous swing highs that played already a very important role here for a wave 4. So if it's not a triangle, if we go straight to the upside, it may happen actually from here. But in either case, once we see a 5th wave, I would expect a retracement, minimum retracement back to this zone. Okay, and then once we are here, then will only be the questions. Will we see an extended 3rd wave as part of a new bearish trend?
Or a C of an ABC.
But the fact is that this, in either case, I would expect this retracement to occur. So no matter if bottom has been established here or if we see more downside. In either case, I think these 3 ways to the downside will show up, and in such case, I think there will be opportunity to catch some weakness here from a 5th wave.
Perfect. Perfect. Loud and clear, my friend. Loud and clear. Okay, we have a question from Greg. It was an earlier question, but you came over and I never had a look at it. I know that it's something that many people are not checking on anymore, but I do check it from time to time. Do you have a strong opinion about the Euro-Swiss currency pair at the moment?
Me?
Yeah.
Let me check. Yes, actually.
I see that you see a push towards the floor, eh? The previous floor of the S&B.
Yes, exactly. So I think that there is potential for more upside here. We could go a little bit more complex. Actually, I'm not sure when it was the last time I updated this wave count, but anyhow, I see prices going higher into a 5th wave. Okay, and then turn to the downside. So for now, I think that this trend is still clearly to the upside, and as you know, this level 1.2 is very important. So I would not
definitely very important. A lot of stops will be there. Yeah.
Yes. So
definitely. What about Euro Yen, Greg? It made an attempt during the first days of the, let's call them holidays anyhow, of the holiday season, let's call it. It made an attempt to break higher. It now seems to be trying to do that once again because it was stuck in a range for more than 3 months. I would have bought actually that break higher if it wasn't during the holidays. But I'm very skeptical due to the days being what they are. So what do you think? What do you see here?
I see.
I see you see a long-term triangle. Huh?
Yes, I see a rise up into this trend line resistance. Maybe will be retested next year, and then I would watch out for a reversal to the downside. Also, if I go to daily chart, actually for our chart, there is a chance that we could trace out here an ending diagonal in wave C. Okay,
so you don't expect much upside to be left there, no, right?
Definitely not. Definitely not. I would not be looking for any longs here.
So you would not be chasing that higher, from what I understand?
Yes, yeah. If I would want to be long euro, then I would probably pick euro dollar.
Okay. What about the pound yen? What do you see there? The pound yen actually hasn't broken above the recent wide range. It's still chopping around in there.
It's in a very similar position actually. 4-hour. Also, I'm tracking here potential ending diagonal and expecting one more push up and then a reversal. Definitely, it's a wedge. So in even basic technical analysis, I don't see that strong moves like they occurred in August or September. Definitely, this is clearly different type of structure, and looking for longs in this within this range.
Yeah, the fun part is that we already saw so many yen pairs, but I didn't ask you for the more obvious one, the elephant in the room. I know it has been extremely choppy and extremely boring to monitor, but what do you see in the USD yen?
On dollar yen, still a triangle. Here's this primary count. Still looking for an ABCDE pattern, expecting a wave E possibly to drop towards the lower side of this contracting triangle. And ideally, this wave E will show up when euro-dollar makes a progression higher into a fifth wave. And then we see maybe a fifth wave high for euro-dollar. That would be perfect timing for dollar yen to find a support at this lower trend line and complete potential triangle. Okay,
so short-term weakness, but a move higher following that.
And then a reversal, yes. And yeah, similar like with euro-dollar. But when it comes to trading, if I would want to be long dollar, I would probably pick euro-dollar shorts rather than dollar yen longs, because this pair can also stay sideways, especially if stocks will do a pullback. So.
But by the way, Greg, a lot of people were surprised by the recent breakout in the USDMXN. From a basic technical analysis perspective, it's also a very nice looking cup and handle continuation formation on the break above the 1925, 1928 area. How do you view this from an Elliott wave perspective? What do you expect? You can in this chart you can see the cup and handle formation, right? In the one you have on the right hand side.
Yes, I see. Yes, but actually, I think that there is what I really like is that we have broken this trend line. That one pretty decisively. Okay. And this could be now a wave beat back towards this trend line. Then there's also, there's also to see here a potential head and shoulders pattern, left shoulder, head, and now right shoulder. Yeah. Yes. So I connect the neckline, and in some cases you will see this part of the trend line of a neckline. Actually, that will limit the range of a right shoulder. So I would not be surprised to see a reversal. So when it comes to this broken trend line, Elliott wave structure, which clearly shows a sharp drop from the high, so it must be an impulse, I think that there is a good chance that we will actually see our turning point next year.
Okay, nice. An area I'm looking for resistance is the 2020 to 2030 area, because both horizontal support resistance, it's both a horizontal support resistance area. If you go back in the chart, in the 2028 we also find the 61.8 of the move lower. So I think that's I would really like it to try shorts at that range, within that range. Because I have to be honest with you, I'm also monitoring an opportunity to short it, but I don't yet have a very clear longer-term outlook. I just believe that even if it proves just to be a pullback, it can yield some decent profits.
Actually, I still see more upside, as you said. 61.8% is definitely a very good level. And also here, as a looking 4-hour chart, looking at the structure within wave C, okay, we need 5 waves up, and as you can see,
we have only 4 at the moment. 3, yeah.
now in a wave for pullback, and I think there's room for more upside for a wave 5.
Perfect. So that's going to be a great opportunity to try the downside then. Yeah.
Yes.
Perfect.
Yes.
Perfect.
Anything else?
Okay.
I will have to leave you now because I have also some other things that I have to care about.
Absolutely, absolutely, Greg. I'm going to cover only one more thing: pound Aussie and pound Kiwi. Thank you very, very much for giving us a last view from the Elliott Wave perspective for 2017. Because as I said to everybody, this is going to be the last webinar of the year. And then we'll be back on Tuesday with the full team being here, Blake, etc. Dale is going to be, I bet he's going to be okay because he's under the weather. He has a high fever. So thank you very, very much, Greg, and Happy New Year, my friend.
My pleasure. Happy New Year to you as well, and all the listeners.
Enjoy with your family. Yeah.
You too. Bye.
Bye-bye, my friend. Okay. Let's have a look.
Hi.
Hey.
Hi. Hi, everybody. Just wanted to make one little comment. I was listening to the analysis, very good as always. I was listening to euro dollar and euro yen in particular, and the theme is kind of similar. A small, a continuation move higher for the euro, and then a drop at some point. I mean, Greg's waves were showing this as well. I just want everybody to remember that we have a pretty big event in early spring next year, which is the Italian elections, and that could bring.
That could be a nice catalyst. Yeah.
Yeah, and we've recently, I don't know, people have been following this, but the five-star movement, that party that used to be very not anti-euro, but they were definitely not going the same way as the current governments. They've recently changed tack a little bit. Their new leader, who succeeded Beppe Grillo, the founder of the party, the new leader is a very young guy, 31 years old actually, and he said, actually, we don't want to leave the euro. The Eurozone, but we want to change a lot of things, a number of treaties we want to change. And you have to read this and think.
I think I've heard that story before. It
Yeah,
never
exactly.
worked out very nicely.
Yes, you can either stay in and go with how things are,
and
or
play by the rules. Yeah.
Yeah, exactly.
Yeah.
He came out. Luigi Di Maio is his name. He's a new guy, very young. And he said, we want to stay in the EU, but we want to change a number of treaties that are hurting our economy, blah, blah. Well, I don't think you can do that. It's very difficult to do that. Sounds a little bit populist in my opinion, but the bottom line is that these guys are gaining traction, and it might be a very close call in the election. So just something to be wary about. And the catalyst might not be necessarily the election day. If they look like they're going to be very close to winning, then I think the move might start way before that. So just
as always, the market is a discounting mechanism.
Yes.
Right, and
exactly.
It's going to look forward. Yeah, of course.
And they've got good momentum. So I wouldn't be surprised if in February they look like they're in a really strong position, and that will be the tipping point for the euro. I'm just speculating, just something that we need to remember. That's all.
No. It's a very good comment actually, and yeah, well, why not? I mean, we've often seen these kind of political events lead to reversals or big changes or whatever, and yeah, sure, why not? But anyhow, I think that both Greg and I, and from last I remember, Blake was also looking to the upside. I think that more or less we uniformly in ForexAnalytix expect that there are very, very high chances that the next move in the EURUSD is going to be to the upside. Now, what happens from there? That's why we're here every day. To be looking at what's changing, because it's a good thing to have an opinion in the markets. It's a bad thing to having a rigid opinion and not changing it when the conditions change, right?
Absolutely.
Okay, so let's have a look at the pound Aussie and the pound Kiwi. As I said, I view that the move lower is now quite overextended. I think this is not a place to be shorting, but I think that any rebound towards the 175 area in the pound Aussie, and if we look at the pound Kiwi, any rebound, towards the 122.50 to 124 area might be a good opportunity to try being short once again, so we can then interpret what kind of moves that were. But more or less, the pound Kiwi looks more clear to me from a structure as well. I would probably be looking for the initial bounce higher to fail and then have another leg to the downside, because I see lower in the specific pair. Okay, so I would expect sooner or later a bounce, but I really need to monitor that bounce to tell you. If I had to make an assessment now, I would probably be selling the first decent bounce higher for at least one more leg to the downside. Okay, so that's what I see, Abdul. Okay, and with that, that concludes the last webinar of 2017. Thank you, everybody. We had a huge attendance, and the webinar has gained a lot in popularity, and we all thank you for that. We wish you, Happy New Year and the best to you and your families, and above else being healthy, and everything else will come. Thank you for being with us for the whole year, and we'll be here next year as well. I can guarantee you that. Stelio, any last wishes?
No, just on my side as well. Sorry, pardon my kids. Happy New Year to everybody. Good luck with everything, and we'll be all ready and waiting to resume the new year. So.
Yeah, with being on full throttle, right? Stepping on the gas. So see you all on Tuesday. Enjoy the holidays. Bye-bye.
Thanks, Steve.